Eric Schwartz has spent his career at the intersection of capital markets, fintech, and global expansion, helping unlock access to working capital for businesses around the world. At Payoneer, he led strategy, partnerships, and capital markets for the company's working capital division, scaling it from zero to over $1 billion in originations. His work spanned North America, Europe, and Asia, giving him a rare global perspective on how SMBs access or often struggle to access financing. Following his time at Payoneer, he joined Covalto, one of Latin America's leading SME lenders, as head of strategy. Backed by top-tier firms like CASEC and QED, Covalto plays a vital role in serving the underbanked segment of Mexico's financial ecosystem. In addition to his operator experience, Eric is also an active angel investor. In this conversation, we explore why Eric has developed a deep interest in global markets, his path to Mexico, his investment thesis as an angel, and why he remains optimistic about the future of the region, and more. Eric, what's going on? Thanks for joining us.
Mac, as always, good to see you. And as I always tell you, man, you look like a rock star.
I don't know about that. But before we jump into your career, which is quite impressive, in your transition from growing up in New York to University of Pennsylvania down to Mexico now, start with kind of your childhood and so forth. I always think it's interesting to hear a little bit about your upbringing, and then eventually how you ended up into the credit and debt space in New York.
Yeah, sure. So I grew up in New York City, a bit of a rare animal in that sense. New York City is an incredible place because you have the world at your fingertips. And so from a really young age, I fell in love with the fact that I had people from all over the world. Incredible stat. In New York City's public schools, children speak roughly 600 languages. And I really leaned into that and found that I could learn so much about the world by growing up in New York. Beyond that, I think I had a pretty typical and mostly happy childhood. But I was always super curious and remain so. And I think I was lucky that growing up, we were able as a family to travel pretty far and wide. And so I had a curiosity for kind of the world beyond Manhattan, beyond New York, and beyond the United States from a very young age. And I think a lot of my academic choices and career has reflected that curiosity.
I think I asked this question to friends, family, and colleagues. Was there one person or some type of event that had an impact on you now that you look back and said, wow, this made me take that leap of faith or that risk that you've come down to Mexico and establish a career?
Yeah, I think it's actually my father and my uncles. So the three Schwartz brothers all went to medical school in Guadalajara in the 1970s. So growing up, Mexico was not this scary and foreign place. It was a place where my uncle Stephen still says it was the best years of his life. My dad remembers extremely fondly, and my other uncle Richard does as well. And so that was kind of the seed. And then on top of that, kind of by fate, some of my best friends from university were all from Mexico City, and many of them came back here after college. And there's a few other things in that, but I think the original seed was through my dad and his brothers.
And that experience, that seems like very random. Or was that a common kind of thread that people from New York that went to medical school in Guadalajara, like
It wasn't
from my
super
background, from my understanding, your
Yeah,
background has no Latino.
none whatsoever. No, I don't think it's fair to say that it was like very common, but it also wasn't uncommon. I've met a few people over the years who studied at the Autónoma in Guadalajara, and I think there were a lot of reasons for that. High quality education, lower cost. I think people pursuing a sense of adventure, but I think those were the main drivers.
Okay, that leads us to your university days, what you study and so forth. And if I recall, you had some kind of history or global studies minor or
Yeah,
major. Yeah.
yeah. So actually, I went to UPenn undergrad, but I intentionally didn't go to Wharton, which is the undergrad business school. I knew exactly what I wanted to study when I was graduating high school, and that was philosophy, politics, and economics. And I wanted that because the majority of MPs in Britain all studied PPE at Oxford. And I thought I wanted to be a politician or a diplomat or something of that variety. And that that course of study had attracted the British political class, and there was nothing really similar in the US. And so, in retrospect, maybe I should have, but I didn't want to go to the UK and I didn't apply to Oxford. And the only place in the US, literally the only place that had a PPE as a major was UPenn. And so I went very intentionally to study PPE, and that's exactly what I did.
I actually didn't know this interest in politics. Like, why? What drove you? I don't think anybody that you mentioned close to you was in politics. Was there something that drove you into this?
Yeah, I think it's a mix of things. One, I like to talk, but also I think there was a sense of civic duty instilled in me by my grandfather. I think in some ways he was actually very typical of his time, where civic engagement was much more common for men who came of age in the 50s. But I think I always admired him in civic engagement. So that was probably one piece of it. The other, I say it tongue in cheek, but it's true. I like to talk and I like to explain my worldviews. And then the third was that it was beyond just politics, it was actually diplomacy specifically. And that kind of ties back to what I mentioned about growing up in New York and being fascinated by the access to the world that I had at my fingertips. And I wanted some career that would let me go global. And I think combining civic interest with a penchant for like discovery beyond our borders was what led me to PPE and thinking that I wanted to be a diplomat. Yeah.
Okay. Yeah. No, and I think that's a nice transition because obviously now you're not in politics, not in the diplomatic space, but maybe one day there was a period in time where you made your way down to Mexico and you had some type of short stint in the US Embassy. Share a little bit about that experience. And maybe that was the last time you were in this.
Yeah. So when I was 20 to 21, I had two very formative experiences. One was I applied to the US Department of State thinking that I wanted to be a diplomat. And I was accepted to an internship at the US Embassy in Mexico City when Hillary Clinton was Secretary of State. And there was a lot happening in Mexico at that time around the Merida Plan. And, it was a really inspiring time in US politics, especially under Obama. Obviously, not everyone feels that way, but there was a certain ethos that I enjoyed and thought I wanted to be a part of at that period in time. And so I came down to Mexico for about 2 months, fell in love with the country, met amazing people, decided that I didn't want to be a diplomat as I kind of got experience of what it's like to work in the government. And then immediately after coming back to the US after that internship, I went to Moscow, Russia to study abroad and directly enroll in a university in Russia, the Vysshaya Shkola Ekonomiki, the higher school of economics. And so I spent about 6 months in Russia, not for diplomacy, and actually kind of repivoted a lot of my courses to studying business, corruption, and business in Russia specifically. And then I came back to the US and finished the last year and a half in Philadelphia at Penn.
It's funny you say that. I think those two countries, if I looked at the list, like I looked at it a while ago, it's like if you look at corruption ratings of 170 countries, I think they're in the bottom third. Don't quote me, I'm pretty sure. So I think it's interesting that you studied that in Russia.
Well, there was, you asked, actually, you did ask about people who were really formative. There was one class I took at Penn with a professor, Philip Nichols, and it was called Emerging Economies. And instead of attributing the disparity in the way nations thrive or lack to do so on culture or anything like that, he used a framework around institutions and institutional integrity, and whether institutions are more relational or whether they're more formal. And that framework has been immensely helpful to me as I navigate the world and try to understand how places work and why they work the way they do. And I think sinking my teeth into places like Mexico and Russia gave me a better understanding of developed economies as well, because I got to see firsthand what did it really mean for a society to be relationally oriented versus formally oriented or institutionally oriented.
Yeah. Did you find that this experience in Mexico and after in Russia kind of made you realize like, this is maybe not for me at this moment where I don't want to pursue this career in diplomacy and in politics? Or did you realize like, okay, I learned this, I like it. How is this going to help me be a better negotiator, better operator, better investor that we'll get to later?
I had no thoughts of the sort. I left Russia believing that I wanted to even move there to pursue a career. And there was a small group of us from Penn who all wanted to do the same thing. And 2 years later, after the first occupation of Ukraine, when green men appeared in the Donbass and other parts of the country, I think the opportunities in Russia for foreigners very quickly collapsed. And that was on the back, by the way, of it wasn't just me and some wonky group of guys from Penn. It was Wall Street extolling the virtues of BRICS, Brazil, Russia, India, China. And I put my cards on Russia, which ended up not panning out. But actually getting to see that kind of unfold or unravel, perhaps better, was in and of itself a highly formative experience. But I knew that after leaving Mexico and the State Department, I didn't want to be a diplomat. I left Russia thinking that I wanted to do work in emerging economies as a businessman. And Russia specifically didn't pan out, but I never let go of that idea of wanting to do developing markets or emerging economies work. And the rest of my career has been a story of exactly that.
That's a great transition. So you finish up school. I know you were at a few companies before, but I was going to jump right into your time at Payoneer and then your role in strategy and basically expanding the working capital operations around the world. And then eventually you led into your time at Covalto.
I joined Payoneer when I believe I was 25. I just turned 26. And I started my career doing insurance M&A at AIG and then a bit of time in real estate private equity, which gave me kind of a technical finance foundation. But I wanted to get into something more entrepreneurial, even more global, even though although AIG was actually quite global. And I wanted to work in a faster environment with people who kind of shared my appetite for risk. And after speaking to a ton of people, trying to figure out what I wanted to do with my life, I found the team at Payoneer. It was actually someone who I thought I was going to work for, who then left. And I ended up replacing that person to help build out the credit and working capital business. And so the decision to go to Payoneer wasn't driven by this passion for payments or passion for credit. It was driven by the fact that Payoneer was operating in 190 countries and territories. When I joined, it had people in, I think, like 12 different countries. Today, it's many, many more. And I thought I was looking for global. This is an offer to join global, like put up or shut up. This is the opportunity. And so I jumped in.
And at Payoneer at the time, I think when was the inception? '05. So it's fairly it's established, not new, but this global expansion was just starting. At some points, you could say this wasn't a startup, but it was like a scale up. Or how do you
Yeah.
see the opportunity at that point?
So Payoneer really hit the hockey stick curve around the time that I joined, maybe a little before. I can't claim any credit for that, but the timing was actually quite good, where there was this kind of great balance between entering a relatively mature operating business that still had a lot of room to run. And I think it's very, very hard for a lot of people who are job seeking to kind of hit that point. And I landed there, frankly, by a bit of luck, but I was still very lucky to hit at that inflection point in a way. Uh, and so, I guess maybe I don't want to deviate too much from the question, but when I jumped into Payoneer, the whole idea was they were paying SMBs all around the world, but the business was really only payments and a bit of prepaid card. And management had articulated a thesis, which was if we know who our customers are, where they are, what platforms they sell on, and we control the flow of funds, there must be some way to offer them credit and working capital. But the details weren't really filled in. What's the product? How to manage the risk? How to finance it? How to build the team? What's the go to market? And so for about 5 years, I spent my effort on kind of solving those challenges, and obviously with a team, and spent a lot of my time really focusing very early on actually building the product, and then pretty quickly shifting to product strategy and the financial strategy behind it, because obviously with credit, you take on a lot of risk and you need capital to actually make the machine run.
Yeah. So if you want to just, and we're going to be brief, but because this is not all about Payoneer and your time there, but you mentioned you built the product. Give us a little brief glimpse into what were you building? How did this product vary across countries? And then how did the capitalization come across different countries?
Yeah. So how are we building? So when I'd entered, there was minimal thinking around the product, but we didn't really even know the right go to market, how to think about the segment. There wasn't really a risk framework not really. There wasn't a risk framework at all. And so we learned by doing. The first experiments we ran were with 3D on-demand printers in Vietnam. Those were very small ecosystems that ended up not really having the right punch that we needed, and very quickly realized that the nature of the product that we were testing wasn't sufficiently valuable and the ecosystem was too small. And then we stepped back and kind of got to what is in retrospect an obvious answer, which was the bulk of Payoneer's business was e-com sellers selling on Amazon and Walmart. And those are capital intensive businesses, whereas print on demand is far less capital intensive. So we should pivot to those. The challenge is that a lot of e-com sellers, especially those in Payoneer's network, were in Hong Kong, mainland China, Russia, Ukraine, Serbia, you name it, but mostly beyond the borders, almost entirely beyond the borders of the US, and not in the easier places to serve like the UK, Canada, or Germany, but in, again, China and South Asia, et cetera. And so that was one of the first shifts. And then beyond that, we had to figure out how to manage the risk. And, we had no real credit experts in the company, but we figured out how to navigate the UCC process. We figured out how to put a real lockbox and a treasury sweep so that any payments that were coming into the platform could be swept to repay. We structured the product to our strengths, which on one hand was great for us. I think it led to building a one-size-fits-all product, which was certainly imperfect, but it worked reasonably well. And I mean, feel free to push in, but that's kind of the core of it. It was
Yeah.
testing by doing.
And for you, you mentioned the team. I don't know at what point you joined, how big this team was. How did you, and this is kind of switching topics, but within this area, how did you find the right people to join this team to scale this working capital division globally, right? Because I assume the expertise is very specific looking at Eastern Europe credit access.
Yeah. So when I joined, the team was still forming. And actually, my first day at the office was in the office in Tel Aviv, or just outside of Tel Aviv. And it was one of the very earlier instances of the people that would become the team all being together. We didn't have any credit specialists. There was a product manager, a marketing person, a program manager, a developer, an ops person, but they were poached from around the company. And then I was kind of thrown into the mix to set the strategy and help turn it into something real. And I was reporting to the CFO, Michael Levine. And that was the beginning of it. But no, there was no expertise. It was very much the blind leading the blind and an internal bet that we could figure it out.
And if you look back now, obviously it's been a few years, biggest takeaways and transition to Covalto, what did you learn that you maybe were surprised by at the time?
I think some of the biggest things I learned were around really about team structure and internal resourcing. We ended up doing pretty well. I mean, I think you can actually kind of test it through the public financial statements, but the business has originated, I think now well over $2 billion across all of the things that we set up. And under my time, it was around $1 billion across all programs. And we did it with a very imperfect product and a very imperfect strategy. And we still got far, but not nearly far enough. And I think part of it was having a clear resource plan and really understanding the architecture that we were dependent on. And there was constant debate and prevarication around if the product should be built kind of independently and siloed, whether we should leverage existing infrastructure, and how to really get the right resources we need to affect the things we wanted to affect. Anything that we wanted to do that would change the collection flow, for example, involved the treasury team, which on one hand makes perfect sense. But Payoneer was processing billions of dollars a month in payments. And so the working capital business was a seed initiative that it was always difficult to get our needs prioritized compared to the core business because we were still kind of a niche product in that broader ecosystem. So I think maybe not the answer you were expecting, but it was a hyper conscientiousness around resourcing and kind of where you fit in the organization and organizational design. That was my biggest takeaway.
When you think of organizational design now, and as you kind of transition to this opportunity at Covalto, what did you take away? Because I know you ended up having like a very senior leadership role in that company. Was there something from day one where you're like, no, this needs to be this way as you started leading strategy at Covalto?
I think it was week one, and it was certainly month one, where I had entered the business and was immediately obsessed with infrastructure. The first questions I asked were around forecasting, our data infrastructure, how we make decisions driven by data. That's the first thing in terms of organization. And then remember, in this instance, I wasn't in a business unit, head of strategy for the whole company, but we were integrating what was Credit Justo with Banco Fintera, which we'd acquired. And so the first thing was, as we think about like organizational structure, it's also like data and information to figure out what's working well, what's not. And I wanted to be a little more meticulous and methodical. Whereas when I was 25 or 26, I was given like a general mandate and I kind of just started doing stuff. And being older and wiser, I took a slightly slower approach to take stock of like, what are our real priorities and what can we figure out based on information that we already have? And at Payoneer, we didn't really do that. We kind of just charged forward without that kind of robust planning.
We'll get into the depth of the Covalto opportunity, but take a step back. The company was backed by some of the leading prominent investors like Kazakh, QED, were some of the prominent investors. It was started in 2016. What was intriguing about the opportunity and what was the value proposition that Covalto had? Because at the time, it seemed like they were maybe one of the leading pioneers in this SME lending space in Mexico.
Yeah, so they certainly were. And I think there were a few things that attracted me to the business. One was at the moment I reached out to David Poritz, one of the co-founders and co-CEOs, Covalto had just received approval to acquire Banco Fintera. And in a market with only 50 banks, the idea that we could access that exclusive club to me was it was beyond acquiring a superpower. It was ensuring survivability. Obtaining a regulated entity can certainly slow you down, but it materially mitigates the risk of failure. And while in the US, the banking sector is relatively competitive, there's like roughly 4,000 banks. Mexico, with its only 50, I think becoming a bank actually enables your upside. Whereas in other markets, again, like the US, it can limit it. What it does do is maybe slow down some of the decisions you can make, but I still think it materially expands your opportunity set. So that was incredibly exciting. The other was that it was solving a real problem. Credit in Mexico is hard. SMEs are truly underserved, and the products that existed for them and still exist for them are insufficient for the demand. I wanted to be part of a story of finance for good. It would be inauthentic to tell you that Covalto is a charity. It's not. It's a business, and they're there to make money. But I did think that the economic services that they provided had material, social, positive externalities, and I wanted to be a part of that.
Yeah, and just to briefly touch on it, we might get to it later, but when you look at the market in Mexico and you see the lack of basically credit access to these SMEs and a majority of the population, what are some key points that you recognize of why is it like this? And do you still see this being this way in the next 10, 15 years?
Yeah. Mexican banks, depending on what source you check, but they're some of the most profitable in the world. Some lists will put them at number one, number two, or number three, but they're near the top. And that's not a function of the banks being the best run or the most dynamic or whatever. It's a function of lack of competition in the market and a lack of, to some degree, a lack of risk, right? When the businesses are large and stable, printing money with no competition, what incentive do they have to go down market? What incentive do they have to invest in technology and innovate? The payoff historically was low, and that's beginning to change. Even in the relatively brief time that I've been in Mexico, which is now coming up on almost 4 years, that's begun to crack, but there's still a long ways to go. And so, yeah, it's a function of lack of competition at its core.
So just to be clear, Covalto's sweet spot, give me the kind of the customer profile that you guys go after and what you serve and maybe a few of the products that you guys offered.
Yeah. So the beauty of the business, and it's evolved over time, but the business as it stands today is effectively full service. There's a automated credit product for, I wouldn't call them micro, they still have to be formal, but for very small businesses where they can get a pretty automated offer relatively quickly, largely self-serve. But if you look in the press and on Covalto's LinkedIn, you'll see that they're doing large deals now with Vimo and Plata and other ecosystem players at size and scale, up to, I think now they've done a few that are beyond 100 million pesos. And so that really captures a wide variety of the market. But the core of it is still middle market SMEs that are formal, but still have trouble accessing the banking sector in a way that's sufficient for their needs. And one of the biggest challenges, and I may be jumping one step ahead, but one of the real challenges there is, historically anyway, Mexican banks did not structure products for SMEs. It was one size fits all. And at Covalto, one of the things that most impresses me about that business and the people who work there is that there are truly brilliant structuring minds at that company who can wrap their head and have the willingness to do so around businesses that are slightly more difficult to serve. And there's all kinds of ways to do that. A lot of this is actually proprietary, so I'd rather not get into it. But that's the bread and butter, where if you're an SME and you have unique needs, the big banks won't help you. So you either have to go to high cost SOFOMs that don't have low cost of capital, or you can go to Covalto, which has the cost of capital of a bank with the willingness to structure of a SOFOM.
And now I know you're not there anymore, but I'll put you on the spot. So then it's become increasingly more competitive, right? You have companies like Confio, you have companies like Zeppelin. Are they direct competitors, and how do you guys differentiate?
Yeah. So each one fills a different niche. I think from a VC lens, a lot of people will put Covalto against Confio. The reality is, I'm trying to get the math right, but I believe the average Covalto loan is something like 30 or 40 times the size of a Confio loan. So it's a very, very different segment of the market. Zeppelin is similar, but from what I understand, they're a little more focused on trade finance, and they have pretty sophisticated AP/AR capabilities. And so it's more of like a financial cockpit than simply just a financial services provider. From what I can tell, people love their product and they're doing great, but it doesn't seem to go head to head with Covalto's
No, and I'm
business.
also holding you to Covalto's business, and you no longer work there. So this is based off the data you have and your understanding. Yeah, no. So then I guess kind of as you move down to Mexico, the opportunity at Covalto is progressing. Was there one person that gave you this unique perspective on the opportunity in Mexico, and who had the biggest impact on you in Covalto?
I think I was pretty organically drawn to Mexico because of friends. And actually, one of my friends is a relatively well-known person in the ecosystem, like a well-known exited founder. And so I saw someone who I'm close to have success in Mexico, material success in Mexico. And I'd always been drawn to the country. And I met David Poritz, who, like me, is an American from the East Coast, on paper, somewhat similar background. And I saw him build this incredible thing here. And I thought, if a guy like David can do it and thrive in the ecosystem, why can't I? And actually, when I first reached out to him, I just wanted to meet a guy for inspiration. I ended up working for him. But that was kind of the first thing, right? I saw a guy like me doing incredible things in Mexico, and I wanted to test the waters. And then fast forward 6 weeks later, I had a signed offer and I was on a flight.
That is crazy. But again, I think there's a reoccurring theme. If you set your mind to something and there's some opportunity you want, you need to be ready for the opportunity and cross the bridge, like you said before, with your opportunity at Pioneer and so forth.
Yeah, I mean, look, you can always analyze things to death, but the truth is that like the best opportunities aren't going to wait forever. So you kind of sometimes you have to move with imperfect information. And then the other thing is that you have to follow your gut and your heart as well. I mean, yes, like they were acquiring a bank. Yes, it was already an established business, but moving to a new country, the integration of a fintech with a bank in an unfamiliar regulatory environment, there were risks embedded in that. But in some ways, it was a bit of a soft landing because I had a nice infrastructure that I could kind of parachute into. And yeah, we did a lot of work to clean things up, integrate them better, reset the strategy, pivot the entire marketing organization and go to market from credit to deposits, at least for a period. So yeah, there were challenges, but it was a bit of a soft landing. And I thought, you know what, the bank, the opportunity, the personalities, that's enough. I'm sure I'm going to find some stuff I don't like when I hit the ground, but go for it. And I did.
Yeah. So then transitioning now, when we kind of met a few years ago, you were very active in the angel space. Taking a step back before we get into specifics about what you look for, what was the initiative to get into angel investing, specifically in LATAM? And I know you really have a heavy focus on fintech.
There was no one thing that pushed me to do what I'm doing. I think the most common arch is curiosity, and I'll explain. Right, but when you think about if you're a person who's constantly hungry for information and you thrive off of that, and you love learning about different business models around the world, there's two careers that actually, especially like high growth business models, there's two careers that really let you do that. One is consulting, and the other is investing, and specifically VC, where you get to work with early stage entrepreneurs all over the world who are taking on a ton of risk, and you get to see many different business models as an investor. I guess like why VC specifically? Because of the speed and the stage and the risk and the kind of personalities involved. And then, why now at this point in my life? I think one is firstly I was able to accumulate, some savings just as you enter your 30s. And then the other was that I moved to a new region, and like I said, I wanted to learn. And having skin in the game is one of the best ways to make sure that you're paying attention. And yes, like I love helping entrepreneurs. I do want to see the region grow. But I think if you really boil it down to this fundamental drive, because there's a lot of ways to make money. So why am I trying to do it this way? It's because of the way that you get to learn and incorporate information. I find it hugely enriching. And I find that it enriches almost everything else I do, whether I'm consulting, whether I go back to operating, or even just the way that I read the news and understand what's happening in the world.
I always reflect on different relationships. And when I first met you, it's very interesting because you made a very clear point. Mac, if you want to learn quickly, start being a part of it. And there's no better way to be a part of it than having skin in the game. And it's true. Like you can read and research all you want, but if you meet a founder and you like what they're doing and working on, you're going to follow them closely if there's some type of capital invested in the business.
That's absolutely right. And my first foray was actually quite relatively conservative. I invested in a fund called Gilgamesh that I really admire. Miguel and Andrew are both like incredible, and they built an incredible business. And I thought, one, if I invest with Miguel and Andrew, I can learn a little bit about what it's like to be an emerging manager because it was their first fund. And then the second piece was that if there are interesting portfolio companies, this might be a way to expand my access. And that's actually played out really well. One of my first direct investments was a company called Miva, which just raised 5.5 million from Kazakh. And I'm super pumped for Abi and the whole team. And that came from Gilgamesh. And so, it's nice to see that the play is working more or less like I thought it would.
So it makes sense how you kind of said this. And I think a lot of people are confused around this, and not to say we're promoting this at all, but it seemed like you had an existing relationship with a friend. They were launching an emerging fund, and you thought, okay, I can learn this way, have some diversity, but also meet founders and have some type of deal flow because I don't have a brand at the time. How has this now changed, and how have you found your niche in finding interesting founders that you want to back?
When I first decided that I wanted to lean in more heavily, I went across every real accelerator in the region. and built out a Google sheet of all of the folks, all of their contact information. And I did a few filters on country and obviously a fintech filter. And I started doing cold outreach. And at some point, I actually put on a backpack after I left Covalto, and I did 2 trips through Latin America, spending about 4 months in total around other parts of the region, trying to meet founders, trying to get my teeth further into the region. And that was kind of like phase one. And then in parallel to that, some of the people that I spoke to, I invested in. Some I ended up consulting for, and then a few became friends, and some actually all three of those things. And so that has helped me build a bit of a brand organically. I've gotten a lot of founder introductions to other founders. Being a partner to Gilgamesh in both Fund One and now Fund Two has been hugely rewarding in that sense. And then I spent a bit of time at Platinus as a visiting partner, helping them with portfolio management, particularly for some of the fintech companies, portfolio company support, which also helped me further expand my network. So I think, I'm not as methodical as perhaps, or at least it doesn't feel that I'm as methodical as some people in the ecosystem, but I proactively look out for companies that I like. I try to leverage my existing relationships to expand my network, and I try to lean in when I see an opportunity to help founders. And whether that leads to me investing or not, it almost always leads to an expansion of my network and meeting more good, interesting people. And then as I've done that, and sorry, it's a long-winded answer, but it's true. Like as I've done that, it gave me the courage to reach out to other funds that I admired in the region and say, hey, I'm Eric. I've invested in these companies. I'd love to chat. And that's helped me build fund relationships, which in turn has helped me meet more founders. So it's a very virtuous circle in that way.
It's one of those interesting points you make, and I can relate to it in many ways. Is like when you're new or you're starting to figure out your niche, you almost don't know where to start. But as you said, you just start, and then from there it flows. How? Let's get more into the technical side. How has your investment thesis evolved? Right, I'm sure some of the concepts or maybe thoughts you had beforehand have now evolved. Maybe some things you've misjudged. What has been some of the evolution of Eric Schwartz's angel investment thesis?
One is stick to what you know, but somewhat more broadly. And I know that a lot of funds don't do this, but I have a certain expertise and viewpoint and relationships where I can add value in the financial services sector. So, when you're an angel, right? Like a lot of people don't really need your small check. So what are the founders getting out of letting you in? It's typically that you bring value, and the value that I really have to bring is in financial services. So one is stick to what you know. And over time that could change as I expand my network and expand my expertise. But for now, that's what I know, and that's where I add value. The other piece is just like with my time at Payoneer and at Covalto, try to build a methodology and a framework so that you can adjust as you learn versus like not being conscious of it. And maybe it sounds obvious, but one is, what stage do you invest in? Do you care about stage? Do stages even matter anymore as people do, smaller rounds as they mature? Do you target a check size or an ownership percentage? How do you think about that? How many investments are you actually trying to hold at any given time? And then as an angel, or incentives are very different than if you're a VC, because a VC needs a fund returner. I don't. I can kind of compare my investments to what I'd get in the S&P with a liquidity or an illiquidity premium. So am I trying to invest as an angel, but with a VC-like requirements, or can I be a little more flexible and think that it's okay that if a small company can sell to a private equity at a 50 million valuation, maybe that's good enough. And so those are kind of the questions that I've learned to ask and understand. And then maybe the last thing is, before you invest, especially as an angel, have a good relationship with the founder. Because again, the returns might be there, but if you're part of why you angel invest is to learn, then not having that relationship with the founder gives you no feedback loop. And then it doesn't help you add value to other people and vice versa. And so at the end, you end up with a lot of money, deployed without any real accruing value add. Not all, but many of the founders that I've invested in, I have a good relationship with. And for those, I'm able to help them better because they're more open to me. But then also I can take learnings from one business. And I don't mean like strategic insights about specific like go-to-market strategy, but general like management follies and foibles, and help other businesses learn from those mistakes, right? That's the value of a feedback loop.
I wanted to kind of hit on this, and it's more specifically to the Mexico region. And we could say broad LATAM, but I'm careful because I know you have some thoughts on that. But do you find that, maybe finding your niche and investing as an angel in Mexico or an emerging market like Brazil or Argentina or Chile has more opportunities and more upside than going back and looking in your network in New York or San Francisco and so forth? Do you actually think there's this opportunity to find more alpha down here? And
Yeah, I mean, I think there's two frameworks that you have to use, right? One is what are the best markets to play in, and the other is what are the best markets for you to play in. And so while I have a good network in New York, I think the phase in my life where I've decided to lean into the startup ecosystem, it really happened here in Mexico in the last couple of years. And so both reputationally and in terms of my network, I'm far more capable of sourcing in Latin America and Mexico particularly than in the United States. And so while I do believe that Latin America presents a ton of opportunity, we can talk about that, it would be naive to say that the US doesn't also present opportunity. Of course it does. But finding the Venn diagram of places with opportunity and places where I can play well. And in VC, right, it's all about sourcing the best deals. For me, that's Latin America.
It's interesting you make that point. And also you realize too, going to that point further, that here you actually have a chance to see maybe these top deals and tier one founders that are building amazing companies. But to get into those opportunities in the US, it might have a couple more zeros behind it. And who knows if you provide as much value to the ecosystem. Is that fair to
Yeah,
say?
yeah, and I think actually recently I've begun to knock on more doors in the US as I've become more interested in stablecoin and how it solves cross-border payment problems. There's a lot of great companies in the US kind of working in that space. But that's something where I have insight and value to add. And so that's why I'm following it. And so I don't draw the line at the Rio Grande. I kind of draw the line at where do I have a lot of value to add and have the confidence to approach a founder and in good faith say that like I can help you. And my relatively small check is still worth the discussion. And so recently with some of the advents of again or innovations in cross-border payments, I've been looking to the US as well. But yeah, I mean, and I also wouldn't say that it's like I think access is typically a function of, or it's certainly a function of your network, but your network is often a function of value that you've added. And I think at Covalto and the things that I learned at Covalto, I've been more of a value add player in Mexico than I was in the US, and I'm very okay with that.
That's a wrap on this episode of Cut the Check, presented by VCMX. If you enjoyed this conversation, I would really appreciate it if you subscribed and leave a review. It really helps more founders and investors discover the show. You can find me on LinkedIn at MacMeyer or check out my website at macmeyer.com for more insights on startups, venture capital, and the Latin America ecosystem. Thanks for tuning in, and I'll catch you next week.